Ladies and gentlemen, we have breaking news to go over in this video, including Japan that is seeking a trade deal as soon as possible. Now, let me give you a little bit of a secret here. I don't think Trump is going to announce trade deals one by one. I think it's going to be all deals announced on a certain day. So I don't know if we're going to get these headlines as fast as we would like, or these deals done as fast as we would like, but I do think deals are ultimately coming. And I will say, just like 2018, we have a playbook for this. When China comes to the negotiations table, before a deal is ever reached, just when they come to the table officially, that is when this crash correction is likely over with, for the most part. Now, the big question ultimately is the damage already done in the economy? Josh Brown said this on CNBC yesterday. I heard it as it was on the TV, actually. He said that nobody thinks these tariffs are going to go into effect as they were written, or the S&P would be at 3,000. It would be down another 40% from here. The question is the damage done? And that's really where earnings season is going to come into play. How are consumers? Are they still spending money? Are businesses still doing okay? Are they still holding up profitability? And so far, we've gotten good earnings, I would say, with companies largely beating. And they're still giving guidance, but they're giving guidance in a range. Like United Airlines, they gave a recession forecast. Like, if we have a recession, here's what our guidance is. And they said, here's our base case, which was substantially higher than the recession forecast. I think you're going to get a lot of that coming out this earnings season as well, where Wall Street may be able to kind of gauge what a recession could look like for earnings, and if these tariffs go into effect, or if we don't have a recession, or what these firms' base case forecast still is. That was a concern that we've had. Are we even going to get guidance from companies this earnings season? And, well, over the next 3 weeks, you're in the thick of it as far as earnings. And I will share that with you in this video. But keep in mind, today is Good Friday. Happy Good Friday to all that have faith. And markets are closed today. So that's why nothing's moving, if you did not know. With that said, let's go ahead and get started with all of this information. Trump administration announced fees on Chinese ships docking at U.S. ports. The U.S. government began investigating China's dominance in the shipbuilding industry, where it manufactures as much as 75 to 80% of fleets during the Biden administration. Steep levies on Chinese-made ships arriving at U.S. ports have been proposed, up to as much as $1.5 million as part of a plan to bring more ship manufacturing back to the U.S., a policy which has bipartisan support. Now, really what Trump is trying to do is get America to be a little bit more self-sufficient, okay? Now, the way he's trying to do that's a little disruptive by tariffs or whatnot, but really right now in the short term, it's all about putting pressure on China. That's what it's about. Pressuring China to come to a deal that makes Trump look good, that makes China look like they're giving a concession. And as of now, you know, there's positive talks, right? There's positive pieces of news, but we don't know exactly where those talks are at. As I've said before here on this channel, the day that the U.S. and China actually sit down and negotiate a trade deal is the last day of this correction, most likely. Now, question would be still, is the damage done in the economy? Are we going into a recession? But that's the 2018 playbook, when the markets fell 20%. When China and the U.S. started to actually negotiate, that was the end of the correction. ECB's Villeroy says Fed Powell is doing his job very well because he is telling the truth as it is. Villeroy says Trump is wrong to criticize Powell for cutting rates too slowly. China's foreign ministry on U.S. port fees on China-built ships. China says they will take necessary measures to defend lawful rights and interests. And the China Foreign Ministry on U.S. port fees on China-built ships says they urge the U.S. to respect facts and multilateral rules and immediately stop wrongful practices. And Ukraine's Deputy Minister of Economy says Ukraine and the US to start new round of negotiations on mineral deal on April 24th. China announces today they will promote faster industrial applications of AI and tech. The Kremlin said progress on a Ukraine settlement has been made. For an example, the Russian agreement to the moratorium on energy strikes. And the Kremlin says no contacts are scheduled with Trump this week, but contact can be established swiftly if needed. And Russia's Foreign Minister Lavrov says Iran is ready to seek a deal within the nuclear non-proliferation agreement, which, I mean, what choice do you really have if you're Iran? You either make a deal or you lose your country. Seems like an obvious choice. And U.S. Vice President J.D. Vance says that he is optimistic we can bring the brutal Russia-Ukraine war to an end. And the China said in a cabinet meeting they will continue to stabilize the stock market, which is something they don't say all too often. Now, this is a huge headline today. Japan's economic revitalization minister Akizawa says, quote, "We want to reach an agreement quickly as tariffs hurt firms." Now, Japan is one of those big trade partners with the U.S. Japan, Canada, Mexico, China, India, Europe. Japan would be one of those important deals that I think the markets would really like, especially since it's in that East Asian region. It's right by China, it's by Vietnam, right? Getting deals done in those areas is going to be a big positive for our markets. Now, ultimately, it comes down to China. I will say that. But getting some deals done is going to be a great thing. Now, there's a lot of people talking about we're probably not going to get a deal here, a deal there, a deal there. It's probably going to be like one day that Trump announces many deals, right? It's not going to be like a deal every week or so. It's probably going to be a bunch of deals that get worked out behind the scenes and announced all at once, which hopefully China would be included in that. And the U.S. and Italy said in a joint statement, the U.S. and Italy agreed that a non-discriminatory environment in terms of digital services taxation is necessary. As per CNBC, a recession is coming before the end of 2025. People are generally pessimistic, says corporate CFOs. The U.S. has offered to ease sanctions on Russia in Ukraine peace plan. And it is being reported that young Americans are losing confidence in the economy. As you can see here, this teal line is really starting to fall. Now, the CNN Fear and Greed Index today is sitting at 21. You're still in extreme fear, and you've been in extreme fear for well over a month now, hitting your lowest level at 3, which honestly I've never seen a 3 on the CNN Fear and Greed Index. But now you're at 21. Things look a little bit better than they were. Markets are, I will admit, trending lower from that 10.5% positive day that we had when you hit that 300-day moving average around 550. S&P's at 527. So you're not out of the woods, if you will, but things are starting to look a little bit better. Now, market momentum, extreme fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear. Market volatility is neutral, safe haven demand in extreme fear, and junk bond demand in neutral. Now, again, I will say, I think it's going to be hard to get peak fear again, okay? Because in the short term, to get markets to hit new lows, I think you need people to get really fearful, right? We're in negotiations for trade deals. Earnings are coming in, generally speaking, better than expected. You're still getting companies that are providing guidance. Retail sales just came in really good, so the economy's not on paper falling apart yet. I think that's a bit of a stabilizer for this market for now. Now, whether the economy continues to hold up, if the economy, weakens from here, obviously that's going to be a bigger problem. Or if ultimately we don't get deals done with China or deals done with, other countries, that would obviously be a problem as well. But I'm assuming there's going to be deals done for like everyone. And it's probably going to be like a baseline 10-20% tariff, with different stipulations, like Europe increase NATO spending, maybe China buy some bonds, Japan buy some bonds, things like that. Maybe get a TikTok deal with China that might be part of theirs, things like that. And I am optimistic that we will get those deals. So if you are all in cash or something right now, you're not exposed to markets, I think that is a big mistake. Again, given all it's going to take is one headline about the US and China negotiating a trade deal for the bulk of this sell-off to be wiped out. To the upside, of course. Markets would rip on that. Now, the AI investor sentiment survey that we did get yesterday really didn't move much, which is interesting because markets bounced quite a bit, but people are still very bearish. I mean, bullish investors actually fell from 28.5% to 25.4%. That's strange. Neutral investors climbed from 12.5% to 17.7%, and bearish investors only fell from 58.9% to 56.9%. Like, you had a 10.5% positive day in that process. And market, sentiment doesn't reflect that. Now, the percent of stocks trading above their 50-day moving average is up to 19.22%. At the lowest point, you were sitting at like 5%. So you've definitely recovered quite a bit, but you're still sitting at like the lows of October of 2023, some of the lower points of 2022. So markets are still in a very weak place. If you're a bull, that means there's room to rally here. If you're a bear, that means, we could fall back to the 5% levels if, things go wrong here. So I think if you're a bull or a bear, there's things you could take away from this on both sides. And I do think earnings season is going to be important. What companies have to say about the consumer, about recession. Do, a bunch of companies give guidance? Do some of them not give guidance? How do you give guidance with tariff uncertainty like this? It's, you have to give guidance that's varying in large ranges because of potential outcomes. So I think earnings is going to be a big catalyst. I honestly think it's probably going to be a positive catalyst. Just with, again, how much fear people have out there. Maybe this earnings season says it's not as bad as we thought. Coming next week, you do have some earnings on Monday, none of which are really important. On Tuesday, Verizon, GE, Aerospace, Lockheed Martin, and RTX in pre-market. Tuesday and after hours, Tesla, that's going to be important. Tariffs, consumer demand, things like that. Intuitive Surgical, Enphase, SAP, Capital One. Wednesday pre-market, Boeing, AT&T, Vertiv, NextEra Energy. Wednesday and after hours, O'Reilly Auto Parts, Alaska Airlines, IBM, ServiceNow, Chipotle, Newmont, Texas Instruments, Lam Research, and Las Vegas Sands. Thursday pre-market, American Airlines, Nokia, Southwest, Merck, PepsiCo. Thursday and after hours, Intel, Alphabet, T-Mobile, Boyd, Vail, Skechers. And then Friday pre-market, SLB, AbbVie, Phillips 66, and some others. So next week is going to be big for earnings. And then the following week after that is going to be even bigger with like your Apples and your Microsofts and your Amazons. Okay. So really the next couple of weeks, earnings is the big catalyst. Now, what we heard from bank CEOs, at least, is that consumers are still spending money, and they think consumers are going to spend money until they don't have a job anymore. Now, if trade deals are not done, that puts firms in a bad position, because at that point, firms are going to have to raise margins internally. There's really two ways you can do that. You can use AI, you can become more efficient, or you can just outright fire people. So if there's not trade deals done, that's where you risk a larger economic slowdown. Now, right now, you're not seeing as much CapEx going on. That could hurt growth, for a longer period of time. But is it enough to push you into a recession when 73% of GDP is consumers spending money and they still have jobs and they're spending money? That's a question I don't have an answer to. But the longer this drags out, the higher that recession risk is, the higher the risk is of a generalized slowdown in the economy. And I think at this point, you really don't want to be jumping to conclusions on either side here. As the risks shift and become imbalanced on one side versus the other, that's where you need to make decisions for your portfolio and, think about what your portfolio needs. If you're all in cash, I think that's a bad decision. If you're all in margin, I think that's a bad decision, right? There's this middle ground that I think is the best place to be in right now, because we don't know what the ultimate outcome is. It could be really good or it could be really bad. So with that said, ladies and gentlemen, let me know your thoughts on this down below in the comments section. Have a fantastic rest of your day and weekend. Happy Good Friday, and I will see you in the next one.